Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Willy Walker, chairman and CEO of Walker & Dunlop, to discuss the commercial real estate market in 2022 and the impact of evolving corporate culture. Willy, it's great to have you with us. Welcome to Trade Talks.
Thanks, Jill. Nice to be here.
You got it. And the commercial real estate market saw major disruptions in 2020. However, Walker & Dunlop was able to achieve success, even leapfrogging JP Morgan, Wells Fargo, CBRE, to become the largest multifamily lender in the US. How was Walker & Dunlop able to survive and thrive in this environment? And can you talk a little bit about the macroeconomic impact of the pandemic?
So I think the ability for us to jump over some of those extremely large and extremely talented competitors was really due to focus and our team's focus on growth at a time when a lot of other larger organizations were distracted by many of the things that were going on during the pandemic. And so the ability for us to grow during the pandemic was somewhat unprecedented. I would also say one thing to keep in mind, Jill, is that we are a very large partner to Fannie Mae, Freddie Mac, and HUD. And so that during the pandemic, when private capital stepped out of the markets, public capital stepped in. And as a very large partner to Fannie, Freddie, and HUD, we benefited from that counter-cyclical capital stepping into the markets.
Nearly 2 years into the pandemic, is the commercial real estate market in a better position last year? And what's your outlook for the market going into 2022, and where you see growth within commercial real estate?
So there's sort of growth everywhere, Jill. I was in New York last week meeting with many of the major institutions who invest in commercial real estate, household names as far as private equity firms and big insurance companies. And there wasn't a single one who was not very bullish on the outlook for 2022 as it relates to the fundamentals of commercial real estate. I would segment the markets into three different buckets really quickly. The best asset classes right now that everyone's looking to invest in are multifamily and industrial. Those two asset classes did extremely well during the pandemic and have great fundamentals today. There is a sort of wait and see attitude around office, retail, and hospitality. I would peel off hospitality, that leisure hospitality has done extremely well, particularly in 2021. And then there are emerging asset classes or niche asset classes, such as medical office and student housing, where a lot of capital that is sort of saying, I can't invest in office or retail right now, is looking for opportunities in those niche asset classes.
Walker & Dunlop announced the Drive to 25 last year, which outlined your long-term strategic goals for the company. Talk to us about these goals and why the company has consistently chosen to set five-year benchmarks, and how have you led Walker & Dunlop to achieve success with this longer-term strategic planning?
As I get asked a lot, Jill, what's the secret sauce to Walker & Dunlop's incredible growth and performance as a publicly traded company? And there are a lot of things that go into making any company successful. But if I can go to one thing that is not only, it's very replicable. You know, you need to be at W&D to get the benefits of W&D and all the little things we've done. But our 5-year bold, highly ambitious business planning process that has set out these 2025 goals is without a doubt one of the keys to our success. And so, look, the goal in general is to take revenues from $1 billion last year to $2 billion by 2025. It's to take earnings per share from $7.50 a share up to $13 to $15 per share. And below that are very specific goals as it relates to growing different business lines in Walker & Dunlop. And what that's allowed us to do, Jill, is to put out to our investors that, sure, things will move up and down between here and there, but we have a track record of 3 times putting out these bold, highly ambitious 5-year growth plans. We've landed it pretty much right on the line every time. And I think investors have a lot of confidence that our team will get to our Drive to 25 goals over the next 4 years.
Yeah, that really is quite ambitious. Let's talk about return to office here. Planning is still top of mind for many companies, many employees, with some announcing permanent remote workforces. And you've been outspoken about the importance of bringing employees back into the office, and even invested in a brand new 60,000 square foot space for your Bethesda headquarters. Why do you feel so strongly about returning to the office? And what do you say to CEOs who aren't bringing their workforce back to the office?
I think it's important to keep in mind that there are 160 million workers in America. There are about 105 to 110 million that are already back at work every day. Construction workers, Target workers, you name it, people who are on the front lines in hospitals all across the country. And then there's this cohort of 50 some million Americans who are in predominantly white collar jobs. And depending on what industry they're in, being in the office is either not that important or extremely important. So if you're a programmer at Google, and really doing your own programming, the need to get back in the office probably isn't that great for either the employee or the programmer or Google. At the other end of the spectrum is services firms like Walker & Dunlop that engage with our clients every day to come up with solutions to their needs, whether it's on financing, whether it's on selling an asset. Those services enterprises, that engagement is incredibly important to us because we're a services company. And so my view on it is at Walker & Dunlop, you can't look at all 1,200 employees in a monolithic way. There are certain people like bankers and brokers that must be in the office, collaborating, being creative, and out meeting with our clients. There are other people at Walker & Dunlop who can very easily manage to a hybrid work strategy that allows them to do their work remotely and come into the office on a less frequent basis. I think the big issue here is what needs to happen from a culture and creativity standpoint to drive the enterprise forward. And each company needs to look at that issue individually. And the only other thing I would say is that there are CEOs out there who view office as an asset that they want utilized. I think that is a very dangerous way to look at this. CEOs should look at this as an asset that is a resource for their employees to use. And if the office isn't adding value, like technology, like office space, all the other things, if it's not viewed as an asset or a resource to use, people won't use it.
And that's a really interesting perspective coming from someone in the type of field that you're in. And it makes complete sense when you think about it from the financial perspective. But let's talk more about company culture, Willy. It's clearly front of mind. It's testing a number of fronts, particularly regarding diversity, equity, and inclusion. And you've talked about how the commercial real estate industry needs to do better. How are you working to make that happen at Walker & Dunlop and for the industry as a whole?
So we've been I think so far, Jill, we're the only public company, I've said this now tens, maybe even hundreds of times, that we're the only public company that put our ESG and D&I objectives in our proxy in 2021 for 2020. So we've published out there publicly what we're doing from a D&I standpoint to drive diversity and inclusion at Walker & Dunlop. And we've tied those goals to executive compensation. And to my knowledge, I'm waiting for someone to say, oh, hold it, there's another company that did that this year, but I've yet to hear of it. And so we're not only being very transparent on what we're trying to do, but we're investing in it. We have something called CRE United, which is working with very, very large owner, operator, developers of commercial real estate to drive diversity into the industry, to drive more assets under management to minority-owned businesses. And we are also tracking how much business Walker & Dunlop is doing with minority-owned firms. And so one of the biggest issues I believe on this is that there's a lot of talk, but as we all know, talk is cheap. It's when you actually put out clear goals like we have at Walker & Dunlop, and then you start to track those goals on a quarterly basis, on a monthly basis, on a daily basis to start to make improvements that we're actually going to start to move the needle on this very important issue.
All right, Willy, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.